Your Life, Your Term Show. Okay, I'm live with Mr. Fabio Campanella. Fabio, I feel like you're one of those guys that has every letter after his last name, and I can't keep track of them all. But
yeah, they're all fake though.
Highly qualified. Okay, with all these letters. So what is your background, just really quickly?
Sure. So to give you background, I run a tax and wealth management firm, the Campanella Group, literally down the street from here.
Yeah.
And we concentrate on self-employed individuals, high-income earning Canadians, and real estate investors. And we try to put it all together. The big thing is we start with tax and financial planning, and then from there, we see what the client needs. Right?
Okay. So what does wealth management encompass? Is that investing, insurance?
True wealth management, if you strip away the individual components, is going to be looking at the client's overall situation, right? So it's not, yes, I manage investments. Yes, we do life insurance. But what we're trying to do, or at least what I'm trying to do, is I'm trying to look at the entire financial situation for the client up front and then bring them to whomever it is that needs to fix whatever component of their financial plan needs fixing.
Yeah, that's cool. I think that's the way you got to look at it, is like a holistic life plan, essentially. Like, what is your life? What are your investments? What are your goals? How do we get there?
Exactly. And like I tell everybody, if you're going to go literally from one destination to another that you've never been to, right? Think of, me or my team as, Google Maps. We're going to show you how to get there, right? Yeah. Based on experience, based on other data from other clients, based on best practices, we're going to guide you there.
Yeah.
Right?
And be able to put all the parts together.
You got it.
Yeah. Cool, man. So Mike was telling me just before we started recording here, I didn't know this, that he actually knew you when he was a bartender and you were the bar back.
That was a long time. That's how old we are.
That's crazy, man.
Time ago. That's where I met him. Yeah.
And that was, so there's no connection from you guys afterward. Like, you somehow stumbled into Rockstar's world afterwards without even that connection.
Yeah, exactly. I stumbled onto Rockstar through one of the team members here at Rockstar back in the day. She's no longer here anymore, but I stumbled onto Rockstar from one of the team members, and I just hit it off with Tom and Nick, and here we are, right? So it's literally when Rockstar first started. That's when I met everybody. And
he said you're a killer martial artist too.
No, not anymore.
Not anymore. Were you back in the day?
I mean, I was probably pretty decent at jiu-jitsu when nobody was doing it. But, if you were to fast forward to now, I would probably be average at best.
This is when it was first exploding?
Yeah, when it was first starting out. And then, no real athletes were doing it. Right. This was just casual practitioners. But, I used to do it back in the day. But, I'm afraid of getting hurt now. So
yeah, fair. What got you into it? Just the UFC early days?
I used to do it in high school. So I liked wrestling. I liked Taekwondo. And then you start watching UFC and you're like, oh shit, I got to try this.
Yeah.
Right.
That was the big new thing.
That was the big new
thing.
It
was the ground game, right?
Jiu-jitsu. And then, Muay Thai came into play. And then people just started combining everything. And it turned into, a huge worldwide sport now.
Yeah.
Right.
Oh, cool, man. You never know. You never know who you're going to come across. That's why you don't fight random people.
That's for damn sure.
Okay, cool. So lately you've been doing a ton of research, podcasts, really just learning about investing in Florida, buying real estate in Florida, moving down to Florida. So we just wanted to bring you on to basically find out what you've learned from talking to all these different professionals. You put out basically like a 5 podcast series where you were talking to a real estate team, you were talking to a property manager, a financing expert, property manager, lawyer, accountant.
Yep.
So we just kind of want to learn what you found out down there. And why don't we start off with why you're looking at that stuff in the first place? Because
that's actually a good place to start. So the reason why, right? As if you're in wealth management, if you're in tax, as your clients age, they start gathering wealth, they start making investments, and then they start, once they've made, the normal investments that they're normally going to make, a rental property, RSPs, stocks, bonds, whatever the case may be, the next logical step, at least for people in the GTA, is probably because of proximity and because of weather, is they start thinking about going south, right? Some people are looking at the Caribbean. I have clients that went down there. Some people are looking at Mexico, but the vast majority of mid to high net worth let's call them Torontonians or people in the GTA, when they think about going down south, or when they think about making investments down south or buying property down south, where are they going to go? We're looking at Florida, the state of Florida, and primarily in the Fort Lauderdale, Miami, and surrounding area. So, obviously, when COVID came around, everybody was all, pissy about, these rules, that rules. And what happens with everyone, right? They think the grass is greener on the other side. So they see great weather. They see people moving around with, supposed freedom of movement and whatnot in the state of Florida.
I don't know if it was just supposed.
I wasn't there, so I don't know.
I could tell you, I went to the Bitcoin conference in April of 2022, and I will tell you, it felt like I broke out of prison.
You know what? I did go down there during COVID, and yes, you're right. It did feel a lot like it felt like pre-COVID,
yes.
Right? Putting all that kind of nonsense aside,
sure.
Right? The idea is that as my clients age, as my clients gathered a lot more wealth, and as we started getting into these geopolitical issues with COVID and this, that, and the other, people started to see Florida as an area of opportunity. And you saw that in Florida because it wasn't just Canadians, right? Although Canadians are a very large component of foreign investors in Florida when you look at the stats, okay? People were attracted to that area. They were attracted to the Miami area. They were attracted to, as they have always been for many, many decades, right? So you saw a big influx into the state of Florida, and you saw a lot of interest in the state of Florida, specifically South Florida. So I started getting all kinds of questions, and I did not have the answers to these questions. And I felt that my job as a wealth advisor, as a tax and financial planner, I really needed to get those answers. Now, do I work in U.S. tax directly? Do I work in, Florida properties directly? Absolutely not. But I felt that it was my job to know more about this than my clients, right? So that I could direct them I could point them in the right direction. So that's what spurred my interest at the onset, right? And what I thought the best way to learn about this was to literally sit down with the experts. And that's basically what I did. I decided to create a fake podcast that doesn't actually exist, but I did put it up on YouTube.
Yeah.
Okay.
Yeah.
And got, a camera crew together, got an editor together, asked whatever questions I had that I felt my clients would want, or that, your clients would want, for example, and run these experts through the mill. Right. And at the end of the day, I learned a lot. I really learned a lot. The biggest lesson that I learned is we're not dealing with Toronto. We're not dealing with Canada when we are dealing with Florida, when we are dealing with the United States, right? It's a different place. And, you do have to really watch your step, and you really have to do your research, and you really have to put your trust into people who have done this before.
Okay. So what were you focusing on? Was it investments down there? Was it actually moving down there? Snowbird kind of vacation homes or permanent residency, opening a business down there? Like what are you mainly looking at?
What I was mainly looking at in this series of 5 interviews was specifically Canadian residents for tax purposes purchasing property in the state of Florida. Okay. Am I looking at people moving there? These topics kind of popped up, but they were side, they weren't the main thing that I was thinking about. They weren't the main thing that I wanted to talk about. My main goal was, okay, I'm here in Canada. I own a business in Canada. I have a family in Canada. Whatever it is that I'm doing in Canada, I'm going to remain here in Canada permanently as a resident of Canada for tax purposes. But I have some money, and I want to put it into a property in the state of Florida. All right. Maybe I want to I want to use it personally. Maybe I want to go hybrid, use it personally, but also Airbnb it, or whatever you want to call that, short-term rental, the property. Mm-hmm. Or maybe I want to go as a pure investor, because I've tapped out the market here in Toronto or in Canada, and I want to diversify into another jurisdiction.
Okay.
Those are the three main things that I wanted to talk about.
Okay, cool. So when it comes to buying down there, like first off, why don't we start with the trends? So South Florida, you mentioned, is getting most of the migration, at least from people in Toronto. That's where the interest is.
From what I've found.
From what
this is anecdotal, right? From what I've found from my clients, and my clientele would be, mid to high net worth Canadian entrepreneurs and real estate investors. So from that constituency, that's what I'm finding. They're attracted to that area. However, there are other types of people that are going to be going to, let's say, Orlando area or the northern side of Florida. I don't concentrate on, like, my clients aren't concentrated there.
Yeah.
However, you are correct. There is a large number of people interested in the South Florida area, the Miami-Dade kind of area.
Yeah. People really want the heat, I'm guessing.
Yeah.
Okay. So how's the market doing down there right now? Like, I know during COVID, it exploded. Has that come down? Have prices come down? Are prices still moving?
So things are not moving as in the same at the same pace, obviously, as COVID. Mm-hmm. Okay. Like many parts of North America, there's been a slowdown in the interest in terms of buying and selling. It's probably more of a buyer's market right now.
Okay.
Much like we are here.
Yeah.
I don't want to overspeak on this particular point because I'm not a realtor. I'm not a real estate professional. You guys would probably know more about that than me. But from my contacts in the state of Florida, right now, the interest in terms of purchasing is not as high as it was before. But when you look at it from a long-term trend, mm-hmm. I'm not worried.
Yeah.
I'm not worried about the trajectory moving forward. The ability to, and you'll see as we start speaking about the individualized topics that I covered in these podcasts, the ability to invest there and to do business there and to lease out and whatnot for Canadians is quite smooth. It's quite fluid, and the numbers speak for themselves, right? I think it's something. I have some stats here that I brought with me, and something like 3 million, north of 3 million Canadians visit the state every year.
Wow.
Right. It is a huge tourist destination for Canadians, likely from both a tourist perspective, just a vacation perspective, but also a business perspective. Okay. Don't quote me on this, but I think there are, I don't know if it's 500,000 Canadians or 500,000 properties owned by Canadians.
Wow.
In the state. That is a huge concentration of foreign ownership. And I do believe that Canadians represent the highest number of foreign owners for properties in the state of Florida.
Yeah.
Okay. Depending on where you look on the internet, somewhere between, I believe it's 70 to 95% of all the properties purchased in the state of Florida by Canadians are actually cash deals. So people are coming in and just buying in cash, which is why I wanted to talk to a financing expert down there. I'm like, why are these deals being done? Now, if you draw into it, are people borrowing on home equity lines of credits or borrowing from parents or whatnot here in Canada? Maybe they are, but the deal is happening as a cash deal, which I'm told cash deals are pretty common in that state. Okay. Maybe because a lot of foreigners buy. I don't know.
Okay.
So, Canadians investing in that state, it's historically been very strong. I think it's going to continue being strong. None of my clients have changed their mind in terms of their desire to have property there or to quote unquote move there at least temporarily, right? I have a number of my investment clients that are snowbirds going back and forth. Let's call them snowbirds, whatever that definition is. Yeah. So I'm anecdotally not seeing a long-term trend of Canadians not wanting to go there. Maybe now there's like a little protest against tariffs and this. Is that going to last? I don't think so because, the weather ain't getting any better here. Yeah. You know what I mean?
Totally. Okay. So you think there has been a little I don't know, dampening on that because of the tariffs, because of the uncertainty with Trump's kind of flip-flopping?
Interest rates.
Interest rates for sure.
Right. The unknown. Whenever you have unknowns in the market, people will halt their buying.
Yeah.
Right. It's very psychologically driven. Any market, whether it's real estate, whether it's stocks, whether it's bonds, it doesn't matter. All asset classes, when there is uncertainty moving forward, people will hold back. Right. So I think that we're getting a little bit of uncertainty right now in the general overall market, and also specifically in the real estate market, both here at home and in the state of Florida. So you're going to get a slowdown. Right.
Yeah, fair. Also, U.S. interest rates haven't come down nearly as much as Canadian ones have yet.
Correct.
So financing costs are going to be more there. What did you learn about financing?
So financing was a really good one. You should watch this one. It's Mark Cruz. He, I believe his company is called N-Source Financial. He is a mortgage broker, decades of experience, hyper funny guy, like he's super off camera. He was making me piss my pants. Okay. So I definitely want to party with him one day. He's in the Miami area, Cuban guy. And he's been dealing with, they call them foreign nationals. He's been dealing with foreign nationals for literally decades. Okay. And the idea when it comes to financing, it's not all that difficult for a Canadian to obtain a U.S. direct financing to purchase a property in the United States. The issue with it is it's not a simple process in the sense that, or it's not a familiar process. Okay. Whenever a foreign national, and this is my understanding from that conversation, when a foreign national wants to buy a property in Florida, for example, and it's under 4 units, then it's conventional financing. If it's over 4 units, aka 5 units or more, we're going into commercial financing. And I have not yet sat down with a commercial financing individual, and I would like to. Maybe my next time, the next time I go down there, I'll interview a commercial financing professional. But when you buy a conventional property, 4 units or less, what happens is you're going to want to expect to put down 25 to 30% depending on the legal structure of the property.
Okay.
If it's a condo, if it's a standalone building, if it's a townhouse, or if it's, let's say, an owner-occupied place. Okay. So you're going to want to look at having a down payment of 25 to 30%. If you have that down payment of 25 to 30%, it's quite a smooth process from what I understand. And a couple of my clients, since I went down there, have actually obtained financing themselves. Okay. And it was a pretty smooth process, right? So they want the down payment. Okay. Now, what you have to understand is the amount of money you spend to purchase the property versus what they consider to be the value of the property are two completely different things. The banks there are going on assessed value. They're not going on purchase price. And if I remember correctly, assessed value is not necessarily comparables. All right. Assessed value is going to be based on the potential cash flow as if the property was a rental property.
Even if it's an owner occupied?
That is my understanding.
Interesting.
That is my understanding. I may be butchering this, and you guys might put this out and catch heat for this, but that was my understanding from the conversation I had with this one particular individual.
Sure.
So it's assessed value. All right. So they will assess a value, which may be very different from what you purchased the property at, or it may be the same depending on the type of property. If it's a triplex, it's probably going to be in and around where your purchase price is, because no one's buying a triplex to enjoy the backyard. They're buying the triplex to rent it out. Yeah. Right. So if the assessed value comes in at $1 million, you're looking at $250,000 to $300,000 down payment. Okay. They may also do some further they probably will do some further due diligence. In some case, they may want your CPA to write a letter, not necessarily guaranteeing income, because they can't. Your CPA is not allowed to do that. But, they want to say, hey, this is the tax return. This is the notice of assessment from the Canadian taxing authorities. This is what their income is. These are their financial statements for their small business. They're going to do some form of due diligence on the ability of the individual to make the payments. They're also going to want to do some due diligence on whether or not the individual buying the property also has a reserve, a cash reserve somewhere in a bank.
Okay.
For X amount of number of months, whatever it is, right?
And how much does that cash reserve need?
I believe it's a year. I believe it's common to do a year
of carrying costs for that home.
Exactly. So now the overall idea that I learned here was before you even start looking for a property, right? You're going to want to get in touch with a mortgage broker or some sort of a financing specialist that is familiar with foreign nationals and specifically Canadians buying properties in that area, right? And you're going to want to know a range of what you can expect to receive in financing before you go out and even start wasting your time, okay? That is if you are trying to get financing. Because if you have asset base here, for example, like I have a client with a huge, let's say, I don't know, life insurance policy, right? I'm getting, a better rate and with better terms here by borrowing against a life insurance policy to make the down payment there or to make the complete payment there, and they want to move fast. I'm going to go with that strategy.
Sure.
Right. And then we'll worry about the US based financing after the fact and we can shop it around. But the idea is if you only have the down payment, you're going to want to line up your ducks first, get all the paperwork done, because as I understand, deals have fallen apart. And you do not want to have a deal fall apart in the state of Florida, because it brings us to James Avello, the attorney that I interviewed down there. He made a very good point that Florida is probably the most litigious state in the country.
Really?
Yeah. People will sue people for any number of things in that state. And there's a bunch of ambulance chasing lawyers looking for work, apparently.
Wow. And the States is probably the most litigious country in the world, just off reputation alone.
Off reputation alone and off the fact that, legal dramas are so popular down there, I would say yes.
Yeah. It seems that way. I could be totally wrong.
Yeah, I would venture to say that if I was a betting man, that you're probably correct. Out of the major economies in the world, when it comes to litigation, you're probably looking at the US being, the best.
Yeah. So you really got to have your legal ducks in a row, especially in Florida.
You definitely have to have your legal ducks in a row, right? So the financing is the first thing. If you don't have any money, why are we even talking about this?
So get that ironed out 100% before shopping.
First you got to decide, do I want to venture out? Because you got to learn something new when you're venturing out into Florida. It's something new for you, right? If you've never done it before. Very different from doing deals here, okay? Number two, do you have the money, right? And then from there, do you have the money? Where is the money? Is it trapped in equity in properties here? Is it in a life insurance policy? Is it in a corporate account? Is it in a trust that you are not the trustee of? Like, where is the money? Because that determines how we're going to get the money over to there to buy the property.
Okay.
Okay.
So when you mentioned you need to have a year's worth of funds, are you personally qualifying for the property based on income at all? Or is it literally based on that stockpile of funds? And what counts as those funds? Does it have to be cash?
That's a great question.
Other assets?
That's a great question that I'm going to preface my answer with I'm trying to piece together this answer for you. Like it's not, I don't have the exact answer. My understanding of the situation is that is a secondary measure that will be used. The primary measure is the assessed value of the property and your down payment.
Hey everyone, I wanted to quickly share my personal journey with the Rockstar Inner Circle. I joined Rockstar when I was 23 years old because I wanted to learn how to invest in real estate and I was looking for the right people to guide me. What I didn't expect was how much more the Inner Circle would give me. It's not just about investing, it's about being a part of a community that is genuinely invested in each other's success. I've learned so much here, from real estate strategies to understanding the economy, personal finance, and how the whole money system works. I've gained the knowledge to build my own business, create my own assets, and leverage the biggest trends in the world. But more than that, it's the growth mindset and personal development that have transformed how I approach life and investing. Having a community of like-minded people to share wisdom, experiences, and lessons with has been invaluable. From finding tenants and growing a real estate portfolio to designing the life you want, it's been a game changer. Being part of the Inner Circle has completely changed my perspective on money and life. The insights I've gained have helped me make smarter decisions, and I'm now way more confident in my financial future. If you're ready to level up your investing, mindset, and your life, I can't recommend the Rockstar Inner Circle enough. It's not just a membership, it's an opportunity to design the life you want. Thanks for letting me share this with you, and I hope to see you in the Inner Circle soon. If you're curious to learn more, feel free to check out rockstarinnercircle.com/get-started for free resources and see if it's the right fit for you. Now back to the show.
Those are the two primary measures.
Yes.
Do you have 25 to 30% down, depending on whether it's a standalone home, a single family home, or a condominium? Okay, that's the biggest thing. Do you have the down payment? Then the next thing is, what is the assessed value? Once those two meet, then there's the additional due diligence that the banks are going to do, and it could be different per bank. I've seen different things with different banks, right? I've had a client that, she had her, whatever, I think she bought a condo, she put 30% down, and this was a personal use condo that she was going to lease out on month to month, right? Which, because, and we'll get to that, why that's important, she was not allowed to Airbnb with this particular condo in Miami. Okay. She can only do month-long rentals.
Because of the building bylaws? Or
Correct.
Okay.
Correct.
Not because of the financing?
No.
Okay.
No, because of the building bylaws. So she qualified with, if I remember correctly, she qualified with her 30% down and her notice of assessment here in Canada with a letter from the CPA explaining how the notice of assessment ties to her income.
Oh, interesting.
Yeah, and it was a relatively smooth process. She paid her fees to the mortgage broker. They put it together, paid her fees to the title company, the lawyer, and Bob's your uncle. It was a relatively smooth deal.
Okay.
Right?
This lines up with everything I recall about learning about the financing from the mortgage broker we work with to help Rockstar members with Florida investments.
Yeah,
like
exactly. So it's your assessed value, your down payment, everything else is secondary.
Yeah.
But you want to start with that.
Yeah.
And you want to understand the properties you're looking at, the discrepancy between the assessed value and what you're going to pay for it.
Interesting. Okay.
You really want to get that taken care of first before you go and start looking at properties. The next thing you're going to want to look at is your legal protections.
Yes.
Okay. And we'll get to what I learned about the actual properties themselves and the costs and cash flows and what afterwards. But your legal protections are very important. Okay. Because I was warned by the lawyer that Florida is a heavily litigious state, meaning that people are going to sue everybody for slips and falls, this, that, and they're going to sue like crazy. You want to protect yourself. Okay. So it's funny. I have a little thing here. So you've got a couple of different structures, right? The first structure would be personal ownership or a general partnership. And I want to emphasize what a general partnership is. You and I, Anthony, we go out and we say, you know what, we're going to do this particular deal together, or we are going to enter into a business venture together. We do not incorporate a company. We do not enter into some sort of a formal agreement. We just handshake and go to business. Mm-hmm. That is a general partnership. A general partnership from a legal perspective is probably the worst thing you can possibly do because there is joint and several unlimited liability. So a sole proprietorship is just me going and doing something, or me buying a property in my name on title and off I go to the races. Unlimited liability. If there's some sort of a lawsuit with relation to this particular property, a slip and fall, a gas leak, an explosion, a fire, whatever the case may be, I'm on the hook for all liabilities, theoretically.
Yeah.
But if you and I do this together, this is even worse, because a judge may say, okay, well, you guys are, liable for $10 million of damages to party XYZ. And then Fab comes around and says, I got no money and I'm claiming bankruptcy. The judge will assign everything over to you. Okay. So general partnership and sole proprietorship or personal ownership is oftentimes the simplest form of ownership in anywhere, whether it's Canada, United States, it doesn't matter. But in Florida, it's the simplest form of ownership. Easy to set up, easy to do, but leaves you with a huge potential liability issue legal liability issue. That being said, it's actually a pretty smooth structure from a tax perspective because it offers a flow through over to Canada, right? So you're going to have to file your tax return in the United States and follow all their rules and regulations, and we'll get to the tax in a bit.
And that's just if you're earning rental income.
That's correct.
If you're not earning rental income, there's no income to tax.
Well, there are some filings when you sell the property of the FERPTA.
Okay, sure,
right?
You're right. Cap gains.
Exactly, right? And there could be some estate taxation issues in extreme cases, okay? But you know, from a tax perspective, you're flowing through. We have a treaty with the United States that allows us to flow taxation between the two countries without triggering much double taxation. Okay. So, you know, you pay your tax in the United States, you take a foreign tax credit on your personal tax return here. You still have to file your T776 here in Canada, but you generally speaking will get credit dollar for the taxes paid in the United States here in Canada. So there won't be a double taxation. Okay. That's personal general partnership. You then go to alternative structures. I don't really want to talk about trusts because that's a little bit complicated. But I do want to talk about what is more familiar, corporations. So people here in Canada are very accustomed to corporate ownership, using a corporation to, you know, put a layer of protection between themselves and their business or their property. It's a very common thing. And here in Canada, we have mechanisms to circumvent what would otherwise be a double taxation situation where corporation gets taxed once at the corporate level, distributes profits over to the individual, and the individual gets taxed again. Mm-hmm. This is not necessarily the case in the United States. Okay, so what the Americans do, and you've probably heard of this structure before, the Americans will make heavy use of something called an LLC. All right, an LLC in the United States is a corporation-like entity, but from a tax perspective will be considered a disregarded entity, meaning that whatever gains and losses will happen inside the LLC will flow out to the individual LLC members. And then there's no tax at the corporate level. All the tax is paid at the individual level. Very common. And it's the first thing that any lawyer who is not familiar with international taxation will suggest. And it was, if you watch my interview with James Avello, who, by the way, solid lawyer, way smarter than me, okay? And I'm not a lawyer, I'm not saying that, but he's a super smart guy, solid lawyer. His first suggestion was the implementation of LLCs, okay? I'm gonna park that on the side. So an LLC is a disregarded entity in the United States, meaning that it will protect you from a legal perspective in the sense that you own a property in an LLC, something happens, you get sued. It's not you getting sued, it's the LLC getting sued. So you could lose the property, but they can't necessarily come out and award anything more than the property to the person who's suing you.
So it's purely for a liability perspective.
Purely for a liability perspective. And then in the United States, because of their particular taxation rules, it's a disregarded taxation entity. Meaning that you just pop everything on your personal tax return, right? Mm-hmm. So they have a double taxation issue when it comes to corporations and individuals. This solves the problem. However, here in Canada, we, under Canadian laws, consider an LLC to be a corporation. Okay? And that's where you get a double taxation issue because it's disregarded in the United States. We do not have this concept of disregarding a corporation here in Canada. So you will file a tax return in the United States, pay US taxes, make a distribution over here, an after-tax distribution over here in Canada, and you don't get the foreign tax credit. So you're paying double taxation. You're paying tax once in the United States, paying double tax again in Canada.
So the foreign tax credit, that would completely eliminate 100% of the taxes because you've already paid them.
Yeah, so it's a little bit more complicated than that. The way that the foreign tax credit is designed is it's designed to make you pay what you would pay had you earned the income here in Canada. Okay. So if you've overpaid in the United States, you're not going to get like extra money back necessarily. Okay. But it's designed to flow the income over here to Canada. That does not happen if you have an LLC.
Okay.
Okay. So you have to be careful, because the big lesson from the legal perspective is, A, you've got to protect yourself because highly litigious. B, you've got to understand the main times you need to engage a lawyer, right? The purchase of the property, the financing of the property, and the sale of the property, specifically with the FIRPTA. Okay. And we'll get to that in a little bit, right? But you also need to be very careful in understanding that the lawyers are American. They are not Canadian. And they are automatically thinking about what is beneficial for an American, not a Canadian. Mm-hmm. So that's where we get into the interview with Brian, who is the cross-border tax specialist. Okay. So he's a CPA. He's not a lawyer. But as you know, CPAs, we learn a lot about law because it affects how numbers are reported and how we report things to the various different stakeholders, whether it's SEC, the OSC, the Toronto Stock Exchange, the CRA, the IRS, whomever it is. We have to understand law to a certain degree. Okay. We then get from there, LLC, to something called a C Corp. A C Corp is a structure very similar to what we here consider to be a corporation. Okay. It is the way I think of it is C meaning closed. It is its own entity that pays its own taxes. Okay. That could lead to double taxation in the same manner as the LLC. However, it could be a good strategy. And I'll cover that if you want to in terms of self-employed individuals. Okay. The final structure we looked at was an LP, or a limited partnership, which, if enough money is being thrown around, I think is the preferred structure, because an LP is considered a flow-through entity on both sides of the border, meaning that it doesn't pay tax. It flows the gains and losses. It flows the income and whatnot out to the individual members of the limited partnership. So it has all the benefits of a general partnership, but it also has the limitation of liability benefits, hence the word limited partnership, of a corporation or an LLC. Okay. So what we generally do in these particular cases, and it could be a Canadian corp or a US corp, it really matters not, is my understanding, but you will incorporate a company, and that company will take a very small percentage of the limited partnership. And that will be considered the general partner, meaning that the general partner manages the limited partnership. There will then be a number of limited partners, 1, 2, 3, 10, whatever it is, doesn't matter. Okay. The limited partners will make capital contributions, and that is their limited amount that they can lose. Okay. That is their at-risk amount, whatever you want to call it. Okay. So you get together a couple people, they put in 250 grand each, you gather $1 million. The limited partner puts in $1. Everybody else puts in $1 million. Okay. The limited partner manages the entire ordeal, signs everything, does it, makes all the decisions and whatnot. The limited partners by law cannot manage. They are just investors. So that's why the courts theoretically will say, hey, listen, these guys are just investors. They're not liable for all this nonsense that happened here, right? You're going to sue. Yeah, they're investors. They can lose their investment, but you can't extend past them. It goes to the limited partner who manages. But the limited partner is a shell corporation that has nothing, right?
Yeah. And sorry, you said they were the LLC?
No, that is an LP. They are the general partner. The investors are the limited partners. Okay. The general partner assumes all the additional liability over and above the invested capital. Okay. Okay. So the LP, in my opinion, is probably, if there's enough money involved, because it's expensive to do the reporting, both sides of the border. It's expensive to set up because lawyers don't understand it necessarily, right? But if there's enough money being thrown around, the LP structure is probably the best way to go.
Okay. What do you mean if there's enough money being thrown around?
Like if you're going to buy a little condo, you can buy some of these condos for 250 grand in, outside of a major metropolitan area, like, what are you going to do? You're going to go and spend 15 grand on legal setup and consulting to buy a little condo that you're going to use yourself.
Yeah.
Right. Because for the most part, these small condos, you can't Airbnb them. Right. So if you're not Airbnbing them,
there's no demand.
You're not allowed.
Oh, because of the bylaws.
The bylaws.
Is there a big crackdown, do you know, on Airbnb?
Most condos, per my understanding, the bylaws will not allow Airbnb.
Interesting.
Yeah. They will not allow short-term rental.
Okay.
For the most part. Some of them don't even allow rental, period. Got to be owner occupied, is my understanding.
I wonder if there is a huge influx of them with Airbnb, over the past 10 years or so, and if this is kind of recent crackdowns, especially in a sunshine state like Florida, right? With so many people wanting to own a little place for themselves, make some money when they're not there.
That's the big thing, right? A lot of people, they are starting to make money. They have good money, but they're not, fuck you rich.
Yeah.
Right?
Buy a place and just...
Yeah. They can't just I've got some clients, they have a place down there that they use sparingly. They're there, let's say a month, 2 months out of the year. These guys are so rich that, the $4,000, $5,000 a month, not including a mortgage. They don't even have a mortgage, but the $4,000 or $5,000 a month between HOA fees, insurance, upkeep, property taxes, it's piss in a bucket for them.
Yeah.
Because they're so rich.
Yeah.
But for, you and me, I'm
counting every dollar.
Yeah. Like I can't do that. Right.
Yeah,
So a lot of
totally.
my clients that are, in their 40s and they're starting to run into some good money, they're earning well. They're like, listen, Fab, I got 300, 400, 500 grand that I can put into a property in Florida, but like, I can't afford $5,000 a month in costs. I want to offset it with, by Airbnb it. And they're heavily disappointed in the fact that they cannot do it through a condo. Right. And it's not necessarily the laws of the land. It's just that the individual condo boards or the associations do not allow it, because the residents that are there, they're like, listen, I don't want parties. I don't want these random people coming in and out. If you buy a place, you're here.
Yep.
You're
Makes
a resident.
Sense. Totally.
Whether you're part-time or you're full-time resident, you're a resident.
Mm-hmm.
You know what I mean?
Yep.
So that's a big issue. So that dream gets shut down like quite often.
Okay.
Quite often.
Just on this LP thing, I'm not sure I fully understand. So it's an LP.
Yes.
Okay.
Okay.
And that owns a small portion of it?
Do you want me to draw it?
Sure. Yeah. If you want it.
Okay. So limited partnership is a structure. It is a partnership.
Mm-hmm.
Okay. So let's say you have 3 people. Circles indicate people.
Okay.
This is the LP. It is a limited partnership. These people are the limited partners.
Okay. 3 people are limited partners in the limited partnership.
Okay.
Got it.
This is the legal entity, the LP.
Yep.
This guy here is a corporation.
Okay.
Okay.
4th guy. And does
That
it
is
matter the corp?
general partner.
Okay.
Okay.
Does it
Canadian corp, US corp, doesn't matter.
Oh, it doesn't matter.
Okay. Doesn't really matter. Okay.
They're the general partner.
So they own 1%, let's say.
Yep.
These guys are 33% each in terms of sharing in the profits and losses.
Got it.
Okay. These guys put $250K each. This guy puts like $1 or whatever it is. Okay. I'm not good at math.
Sure.
All right. This guy here, the GP, has absolute control over the LP.
Okay.
In terms of making all the business decisions. These guys are silent investors.
Okay. Got it.
Okay. You put a property in here, it goes up in flames. Okay. Lawsuit, you owe $10 million. All right. The judge says you owe $10 million, you killed the whole family. All right.
Okay.
The judge will only assign, from a financial perspective, $250,000 each per limited partner, and then go for the rest here to the general partner. The general partner is a shell corporation with no money. So it claims bankruptcy. So this structure operates from a legal perspective very similar to a corporation, in that when you have a corporation and people buy shares of the corporation, if you think of it from an accounting perspective, it's, debit cash, credit equity. Now that company has retained earnings of $1 million or $750,000 in this particular case. You go and get sued, the corporation loses its $750,000, all the assets are cleared out, you claim bankruptcy. You can't go out past the corporation to sue the shareholders. These are the shareholders. We just call them limited partners.
Okay. So only the money in that corp is.
Yeah. So it's an alternative structure. It's a hybrid between a corporation and a partnership.
Okay. So this is just damage control.
Damage
keeps it all within that corp.
Yes.
They can't come after you.
But the beautiful thing is that the LP is not a taxable entity, neither here in Canada nor in the United States. It flows gains out here. So everything retained. Exactly. So the limited partners will then claim the income in the United States, pay their taxes in the United States, claim a foreign tax credit here in Canada.
Okay. So you're only getting taxed once.
Exactly. So it's a in my opinion, it's expensive to set up, but it's a great way to set up especially if you're dealing with multiple people, but it's a great way to set up your investment in a place like Florida where there's a high chance you're going to get sued, but you also don't want to get hammered in taxes.
Yeah.
You kind of get the best of both worlds.
Okay. And how expensive would something like that be?
I mean, to be honest, to do this properly, I would say somewhere between $10,000 and $20,000.
Really?
Yeah, like because you're not doing this. Usually, you're going to do it with like a commercial property or a 5-plex or more, and then you need a lawyer who understands U.S. law, Canadian law, a U.S. cross-border tax specialist to do whatever it is that they need to do, and then you have to also think about the next level, right? There, for every action that you take, there's going to be a next level action that's going to affect, let's say, your estate, right? So from here in Canada, now you're going to have to possibly update your will, right? Because, all right, well, how is this going to work? What happens if you die? What happens if one of the limited partnership partners dies? So it's not just a very simple thing that you want to do out of the box. You want to have a good, tight, limited partnership agreement that deals with, if somebody passes away, if somebody gets a divorce, right? Like these sort of different things.
Okay. So I guess this is more so if you're renting a property out, if you're looking to earn income.
Yeah.
Yeah. Because if you're just owning it,
who cares?
Then it doesn't matter.
Who's coming into your house?
You can own it personally.
You don't buy
need to buy it in a
insurance,
corp.
you're probably fine.
In terms of liability.
Yeah, in terms of liability. The only issue that you may want to look into, which we only barely touched upon, which maybe I'll do, if there is interest, I'll do a bigger interview on this, is the estate issue. So if you're heavily invested in the United States and you're very wealthy, right? There could be probate type issues, and there could be estate taxation issues, right? By owning the property personally. But if it's a small property and you don't think you're going to be passing it down to your children and whatnot, personal ownership is generally seen as fine.
Okay. Because then you would just sell it on death?
You're going to sell it when you're going to hit a point where you're getting too old and you don't want to go down there anymore or whatever. And if it's to the point where, it becomes worth so much and your lifestyle dictates that you want to pass it to the next generation, you want to do some estate planning anyways. Maybe you do a reorg or whatever, right? And there's always a way to reorg things.
Okay. So did you get a chance to learn about insurance at all?
I had scheduled to speak to an insurance broker.
That's like the one guy, I guess.
That is the one guy I did not get a chance to speak to. But insurance, basically speaking, insurance is very expensive down there, right? You have hurricanes. You have there was a big incident that happened in Miami area where like a condo collapsed or some crap like that. So insurance is a definite cost, which brings us to kind of probably you're going to want to ask about costs and this, that, and the other, right? Buying a property in the state of Florida, there's this illusion. It's like, hey, look what $1 million gets me in Fort Lauderdale versus $1 million in Toronto, right? And you have this illusion that you're going to get so much more for the same price in Florida than you are here in Toronto. But that's not necessarily the case, right? Insurance is one of those things that contributes to it. But number one, there's the exchange rate. The exchange rate fluctuates, and right now it's not the best, right? So $1 million US versus $1 million Canada, we're already
taking a big haircut.
Exactly. Number two is the future cash outflows on the property, HOA fees. Okay, much higher in the United States, non-existent here for the most part. Maybe there's condo fees, but that's about it. Insurance higher down there. Property tax much higher in Florida, right? I believe the amount is 1.7 something, maybe 1.5 to 2% of the fair market value of the property
each year,
or the assessed value each year. So $1 million property, you're looking at $17,000 just in property tax, plus HOA fees, plus upkeep, plus, big hurricane comes, you get denied an insurance claim, yada, 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 yada. You have to factor all of that into the equation when you're doing your net present value calculation or when you're doing your projected cash flows, right?
Yeah.
You
Entity setup.
Exactly. There's the setup,
the maintenance,
the fact that you have to file a foreign tax return in the United States. Okay. The fact that you are going to have to file here in Canada, T776 on your personal tax return, T1135 on your personal tax return, or if you have an entity, a T1134, which is complicated. There's a lot of...
So even if that foreign tax credit takes care of you not paying,
you still got to pay somebody to file this.
You still have to file it.
Yeah, you still got to file this.
Yep.
All of this has to be filed, right?
Another cost. Yeah.
Big, fat, ugly penalties in the United States. The IRS doesn't mess around.
They don't mess around, no.
Right? The CRA, they're scary, but they're not really that. They're not the boogeyman. The IRS will come after your neck, right?
Yeah.
They don't
no
mess
matter
around.
where you are in the world.
They don't care.
Yeah.
They don't. What do they care? They can just seize your property.
Yeah.
Right? The Americans, like, they don't mess around, right? So you have to file, and it's complicated, and it's expensive, and it's time consuming, and it doubles your time and money wasted in April or whenever it is that you're going to be filing your tax returns, right? So you have to factor all of that into it as well.
The HOA fees, you mentioned them a few times. Are they just more common there? So this is homeowners
They're all over the
association fees.
Yeah,
why is it so common there? And can you buy a house that doesn't have HOA fees?
I'm going to speculate as to why. I suppose you can, yes, but I'm going to speculate as to why. So the state of Florida doesn't have an income tax. So it's quote unquote a tax-free state. You pay your federal income tax, but there's no state income tax. So, you drive around and you look around and there's cops, there's fire department, there's roads, there's garbage removal. They got to pay for this somehow, right? So you're going to get nickel and dimed on, things like insurance and, employer healthcare taxes or costs, insurance, HOA fees, property taxes. Somehow life has to get funded down there. And that's how they're going to do it.
So it's just funded differently.
It's funded differently, and it's just a different culture, right? They have HOA fees. They accept HOA fees. You're not going to start introducing this in Brampton here all of a sudden, right? It's not a culturally acceptable thing here because we just pay a tax and then it gets redistributed.
Lower maintenance costs if there's an HOA and they're taking care of things like landscaping and stuff.
But that's not necessarily all taken care of, right? So there's certain things that are going to be taken care of, and it's area specific. And when I say area, it's microcosm area specific. That's why you really do need to know a realtor that knows the area you are looking for.
Yeah, totally.
Right.
What is your advice for finding a realtor down there?
That's a tough one, right? So I would start with the first thing, finding any professional, right? You sit down, and the first question I ask is, this is my situation. How proficient are you, and how much have you worked with people in my specific situation? Right? So whenever when I first started my business back in 2010, I was so desperate for clients. I would take anybody.
Yeah.
Right. And there's a handful of clients I should never have taken. Like, I just spun my wheels on their situations. I screwed things up probably, but it ended up working out. The idea
You know who
is-
you are listening.
Yeah. I hope they're not listening. With the statute of limitations is gone. They can't sue me anymore. But the idea is, whenever I have a new client inquiry, I always take a half hour, talk to them, get to know their situation. I would say 1/3 of the time, I'm like, listen, this is great. I would love to take you on. This isn't what I do for a living. I'm going to have to bring you to someone else. You've got to take that into your own hands. So when you're looking for a realtor in the US, in the state of Florida, do they know the area? Okay. How long have they been doing this for? Okay. That's good. They know the area. They've been doing it for 5, 10, 15, 20 years, whatever the case may be. Have you dealt with Canadians? Better yet, are you a former Canadian or a dual citizen, right? That's even better, right? But have you dealt with Canadians? Do you understand how we do business? Very different from the way that Americans do business, right? So do you understand, do you have the connections to introduce me to people that can get me financing? Can you put me in touch with 2 or 3 insurance brokers, right? What are the HOA fees? What are the costs? What are the all-in costs of ownership, right?
Yeah.
Like, this particular condo looks nice. It's new. What is the reputation of the builder, right? So all the things that you are going to do, the due diligence you're going to do here in Canada, you've got to be hyper aware when you go for a realtor down there, right? And my biggest tip, I think, seeing through my clients, vicariously through my clients, because I don't own any properties down there, but vicariously through my clients who have had success and failures in Florida, what you want to do is you want to ensure that the team is assembled.
Yeah.
Right? Lawyer, realtor, financing, tax, and just dish out a little bit of money at the onset so that you're not getting people that are just trying to get you as a client, right? Pay them. Say, here, I'll pay you a consulting fee. Tell me what to do, right? Educate yourself, then you make your pick, right? And you want to make sure that your team, whoever your central guy is, probably your central person is going to be the realtor, that your realtor is comfortable working with all these individuals, right?
Were you ever considering buying a place in Florida for yourself before doing this deep dive? Whether it's income property, place for yourself, hybrid, is this something you're considering? And after learning all this, has that changed your mind?
I was like, man, I'd love to have a hybrid property down there, just like
I think we all do, right?
shoot down. And then that was shot down very quickly by the realtor. The realtor is my cousin and his wife, right? So I've known him my whole life, obviously.
Oh, cool.
He's my cousin, and he shot that. He's like, Fab, like, you can do that, like, sure, but you're limiting what you can get. Like, you're not going to get a condo. It's just not going to happen, which is what I wanted. And, it's not as easy as you think, right? So I said, okay, he was very honest with me. So I said, forget about it. And then we started looking into other things. Am I open to investment in Florida? 150%. I'm open to investment on the moon. I don't care.
Yeah.
When it comes to investment, everything is a cash flow to me, right? It's how much cash flow can I predictably make off this thing, discounted to today, versus the risk and the alternatives. So yeah, am I considering it? I'm always considering it, right? But have I really looked deep into it for myself? No. No, I have not.
What do you mean by cash flow discounted to today?
So what I mean by that is this, okay? $1,000 now versus $1,000 10 years from now. Which one are you going to take?
No.
Obviously.
Yeah.
Right? Are you going to take $500 now, or are you going to take $1,000 10 years from now?
Probably the 500 now.
Right?
But
because it depends on what your alternatives are. So if you're the type of person that will never invest in anything other than a GIC, you might take the $1,000 10 years from now, because you're probably not going to get a 7% compound rate of return after tax on GICs, right? And what are you going to do? The math very quick. You're going to need 7% after tax to get $1,000 10 years from now by putting $500 down. But if you're the type of person where, like, hey, I could take that $500, buy a property, put on some leverage, get some people in, and you're willing to do all that work, you may exceed that $1,000 10 years from now. You may get triple that, quadruple that, right? So for you, you're going to take the $500 now, but you have to look at it from the perspective of risk. What is the alternative investment? What am I projecting on the alternative investment?
How does currency debasement play into that?
Well, currency debasement is obviously, I'm not an economist, right? But when you look at currency debasement, like, are you going to be holding things in cash or cash equivalents, right? Then obviously currency debasement is going to be something that you're thinking about. But if you're buying appreciating assets, I don't care what it is, cryptocurrencies or stocks or, some sort of alternative investment or real estate, right? It's almost a non-issue. So you're just looking at what is the purchasing power of that $1,000 10 years from now versus the purchasing power of that $500 right now.
Yes.
Because it's just numbers on a screen, right? The money is just numbers on a screen. It's what can I purchase for it?
Exactly.
That's the way I think of it, at least, right? As a non-economist, non-scientist, right? Mm-hmm. So, I mean, I hope that answered your question.
Yeah. Well, it's something I've always been meaning to learn more about, is the discounting of cash flows. I know that's how
it's basic arithmetic.
Companies are evaluated and stuff. And
it's basic arithmetic, right? It's you can play with it, right? It's just, what's the discount rate that you're going to use, right? So you can come up with any number of theories on what that discount rate should be.
Got it.
So
it's how you value the money now versus later.
Exactly. Okay. And I would value it by the purchasing power of the money.
Yeah, totally. Yeah, that's how I would too. Yeah. Okay, cool. So the realtor specifically, was there anything in particular that you learned from your cousin down there?
Yeah.
Italian guy?
Yeah.
Nice.
Yeah. Italian, and his wife is a Mexican lady.
Were they Canadian before? Or?
He's Canadian. He's a dual citizen, and he moved in his 20s to Florida. He was working for American Express. Super smart guy. He knows everybody in Fort Lauderdale, like everybody. Like he was like, "Hey Fab, come down." He goes, "I want to do another podcast episode," and he like brought in some dude that won what is that thing? It's 2 Super Bowls. Like, and it's like, I'm like, how do you know this guy? He just knows everybody. So obviously, like, good realtor, he's well connected in Florida. He knows all the areas. He's done a ton of commercial deals. He's done a ton of residential deals. He also is a builder. Him and Julian being the property manager, they have a company where they build. They find good quality properties, and they build these like mid-level luxury homes, beautiful. So he's very well versed in Florida real estate. Specifically, he's very well versed in Fort Lauderdale area, which is probably one of the most popular areas for Canadians. And he's a straight up guy. He's like, shuts down all your dreams right off the bat so that you're not wasting anybody's time. And the big thing with him is, listen, before you even come to Florida looking to make a deal, get your ducks lined up. Understand, what you're going to be able to qualify for, how much money you actually have right now, and just understand you got to be ready to sign on the dotted line when the deal comes, right? Because if you're hemming and hawing and you're looking to put in a bunch of conditions, like, you're not going to get anything. It's not going to happen. Right? You got to be ready to strike, because Americans are ready to strike when the iron's hot. They don't sit back and think. And that's what I got from him. He's like, he's been there for 2 decades, and he's like, when Americans want to make a move, they make a move, right? The other thing that I learned from him and from Julian, the property manager, great guy, right? He's also Canadian as well. Canadian, moved to Florida. America, from the perspective of being a landlord, is the polar opposite of Canada. Whether that's good or bad, it depends on which side of the equation you're on. If you're a renter, Canada's, the best, right? Because you could squat on a property. The laws are designed in such a way that you're not going to get thrown out on your ass, all right? If for whatever you run into hard times. That's not the case apparently in Florida. the case in Florida is you don't make your rent payment, get the hell out of here. I don't care where you go. You just can't be here.
Yeah.
And the sheriff will show up with guns and tell you to get the hell out. Right. That's another thing that I learned about properties down there.
Yeah.
Right. But the biggest thing I would say that I learned is that if you are looking to make money, simply stated, you don't care about a hybrid property, you don't care about going down and enjoying the weather. If you are looking to make money, the best way to look at it is long-term buy and holds, multiple units, scale up those units, refinance, do it again. There are a lot of absentee owners for these larger properties in the state of Florida where they've never been to the property for decades and they're dilapidated and they've got these, Section 8 renters, which we could talk about, which are not bad renters. They're actually quite good Section 8 renters. That's government subsidized rents. Okay. And these properties have multiple units that can easily be cleaned up unit by unit, increase rent by a couple $100 per month, which translates into a 20-30% increase in your rent roll, which once again, that's how they assess the value based on your rent rolls. So once you've increased the value by 20-30%, get your deposit back on a refi, do it again. And there are a lot of wealthy families that are employing this tactic there where it may be a little bit more difficult, is my understanding, to do that here.
Okay.
So that's one of the biggest lessons I learned from a purely financial perspective.
Yeah, got it. Huh. I guess then it just comes down to executing those renovations, managing it from afar. To be honest, it sounds great once you get in. It's just there's setup costs, there's the initial currency conversion costs. Now, of course, afterwards you're earning US dollar income, and that's going to bode well for you here because it's got more purchasing power.
For now,
yeah. If it flipped, that would really suck. So there's the legal setup costs, yeah, and then there's the currency conversion costs. Then you're in, and then maybe you have some more. You definitely have more favorable landlord-tenant laws. Property management, it's all about getting a good team. Somebody who's on the ball, who knows what they're doing. Value add stuff depends how active or passive you want to be, but then you do have those HOA fees, higher property taxes, and what was the other one? Higher property taxes, HOA.
Insurance.
Higher insurance.
Right.
That's it. Depending.
And then catastrophic damage could happen, which is very rare here.
Which, even if you're covered, is just annoying to deal with.
What if you don't, how many times have I heard about people making insurance claim and they're denied because they didn't tick this box or that box because they went with the cheapest deal, right?
Yeah.
So there's a lot to think about, but like anything, like any investment, it doesn't matter. You're going to get rewarded more the more effort you have to put into that investment.
Totally.
Because it starts to blend between passive investment to small business, right? So the more involvement you have, that strategy I'm talking about, where you take a dilapidated property and you start renovating unit by unit, refinance, do it again, that's a lot of work, buddy.
Yeah.
Right? That's a small business. So if you want it to be passive, then you've got to hire people and say, I don't even want to make a decision. So they're going to rape you for fees and this, that, and the other, and they're going to take kickbacks from everybody. So you're not going to get the same return on investment that you would get, right? So if you want to just be passive, you can still do that in the state of Florida. But being completely transparent here, why would I?
Mm-hmm.
Why would I have a property 3-hour, 4-hour flight away from me when I can have one in my backyard? Am I really going to make that much more money over the long run? Maybe I'm stupid. Maybe I just don't know. Maybe the answer is yes. Okay. But I'm also introducing multiple layers of complexity. I'm playing with the currency. Okay.
Yeah.
The currency could go the wrong way when I need the money. Okay. But it might go the right way. I'm playing with legal issues. I'm playing with tax issues. I'm doubling my time and effort and money spent on tax compliance, right? I'm introducing estate planning issues. So there's got to be a real incentive for you to go outside of your comfort zone over there. Either Canada is screwed and we shouldn't be buying properties here, which I don't think is the case, or there's such a great opportunity over there, which also I don't think is the case, because if it was that great of an opportunity, everybody would be there.
Yeah, that's fair. There's this one Rockstar team member, Matt, and he was on the podcast about a couple months ago. And the reason he's now going down to Florida is because he's fully tapped out on mortgages up here. He's done everything he can up here. He's fully tapped out, but he has the net worth to qualify for properties down there. So he has the cash, he has the net worth, so he can get these, I believe they're called DSCR loans. I wrote them down here, where you're qualifying based on basically what you were talking about, where you're qualifying based on the net worth by having proof of funds, 1 year's worth of funds in the bank account, or cash equivalent. They consider, I think, TFSA, some RSP stuff in that. I don't know the exact rules around that, but they do qualify certain cash equivalents as being able to qualify. So now he can go down, he can continue growing his real estate portfolio, hedge jurisdictional risk from having all his eggs in one basket up here in Canada, spread out his portfolio risk, earn US dollar income, and start building a credit history and portfolio and income and business down there, where he wants to kind of migrate to personally as time goes on anyways.
And that's actually the perfect scenario.
Yeah,
and
it's a perfect scenario.
Comes right back to what I was saying. It's like, okay, I need an incentive to go there. And he has the perfect incentive. He can't get the financing here. Mm-hmm. Now, if you flipped it around, I don't know this individual. What's his name?
Matt James. Okay. I don't know him. So I'm making comments that may be incorrect. So if Matt is listening to this is nothing against him. It's okay. We can lie about him.
Yeah. Okay.
Just make stuff up.
So this imaginary person that I don't know. Okay. I don't know his situation. I may have met him before, actually. He has a huge investment constraint. He wants to grow his portfolio. He wants to make money. He's ambitious, but he is constrained by financing here in Canada. Perfect. So let's go somewhere else. So it makes absolute sense to go to our largest neighbor with a similar legal system, a similar tax system, and the exact same language that we speak. Why is he going to go to Colombia or Venezuela or Argentina, where they're speaking a different language, they have a different system, right? Yeah. He's making the exact right move that I would say if I was advising someone. It's like, okay, you're tapped out here. You want to continue going? Let's look at Florida. Let's look at Cleveland. Let's look at some other area in the United States and see if we can continue the process there. He's doing it right, in my opinion.
Yeah.
He's made the decision, not because he wants to be cool and do something somewhere else so you can tell people that. He's doing it because it's a great business decision. Right?
Yeah.
But he's probably putting some work into it, right? I don't think it's he's got to learn a new system. Like, he's got to be an absentee owner and trust people down there. So you have to, in my opinion, you've got to explore. If you're just a new investor and you just ran into some money, probably you're going to want to take a look at everything, but probably you're going to want to take a look closer to home first. And then if there's a huge incentive to go south of the border, okay, go. But if not,
it can be a bit of that grass is greener on the other side mentality.
Exactly. You have to consider everything. And when you're not used to another area, there's a lot to consider. That's kind of what I gathered by, I interviewed these experts with decades and decades of experience, a lot of these guys, and they were being very neutral when they talked to me. They weren't trying to sell their services or anything. They were being completely neutral. If you watch the interviews, they're very neutral with me. And even me knowing what I know about, wealth management, working with, very successful real estate investors for 20 years, right? Even after sitting down with these guys, I have a fragmented knowledge of the situation down there. Mm-hmm. By no stretch of the imagination am I an expert on this.
Yeah. You're just trying to piece it together. So what has the experience been with your actual clients that own properties down there? From talking to them, just anecdotally, what has it been like? Because have some people been like, man, that was a headache or wasn't worth it?
I've had both. I've had the exact same experience as people here. Okay. So it's some people have, obviously I have way more experience dealing with Canadian investors, right, than American investors, but the same complaints or praise, both sides of the border. right? It's just some people are not cut out to be landlords or to invest in real estate. It's not like investing in an ETF or a GIC or something like that. It's a multifaceted area of investment that blends small business ownership with passive investment, right? So it's a complicated thing. It's not something for somebody who is easily stressed. You know, I have properties, I have short-term rentals, I have long-term rentals. I'm not very easily stressed by something. Oh, like on one of my properties, the toilet broke. Some people would be extremely stressed by that situation. I don't care.
Yeah.
Toilet broke. There's still a hole. Somebody can still use it, right? Like there's going to be a couple of days where the toilet seat is busted, right? But some people can't handle that, right? So if you are the type of person that gets somewhat stressed with properties here, you're going to have to deal with additional stress because you are not there. You're an absentee owner, right? And that is the major complaint that I've had. So I have this couple that I know that my cousin is very good friends with them. They bought a property down there, and it's a house, and they Airbnb it, right? And they wanted to self-manage it for a while. They self-managed it, and then they just gave up. They were like, what the hell is this? Like some, who knows, crazy people had a big party, tore shit apart, and then the cleaners came, but the cleaner isn't the property manager. They're going to come, I'm not touching any of this. There's like, I don't want to say it on publicly, but there was some stuff that nobody wanted to touch in the unit, and a property manager would deal with that, but the property manager is going to take 18%.
Got it.
Right? So these are the complaints that I'm getting.
18%?
Something along those lines.
Sure.
Let's say 15% for short-term rentals.
Got it. Yeah,
15 to 20% is totally normal, right?
Sorry.
Long-term rentals are much lower, right?
Yeah.
But for an Airbnb type property,
Totally
Verbo
normal.
type property, 18%, that's normal.
Yeah.
So you don't want to pay it. Now you got to manage it. But you're here in Toronto and you're busy with work and kids and this and that and the other. How are you going to manage this freaking property?
I know.
When you got somebody yelling at you, a bad review on Airbnb, like whatever the heck the case may be.
Yes.
So once you layer in that additional cost of the property manager, you may as well have just bought a property here and leased it out long term down the street.
Home,
down the
look
street.
at your actual return. Yeah.
Exactly.
Fair. Okay, cool. I think this covered a lot. Is there anything else you think is worth sharing?
I mean, okay. I have a couple of key points that I took away.
Okay.
And I wrote these down for you. Okay. So South Florida may look cheaper than the GTA when you're looking at price. It's an illusion. You have to look at all in costs.
Okay.
The cost of ownership,
costs.
the carrying costs, and the cost to set up. Okay. And don't forget, a dollar is not a dollar. A Canadian dollar, a US dollar, it's always in a state of flux. That's number one. Financing, it's 100% possible, and I've seen it with my own eyes. Not that difficult to get financing as long as you have a sufficient down payment and proof that you're not a degenerate. Okay?
True.
So if you have those two things, you do really need to line up your financing well before you decide on making an offer on a property.
Do you know if it works like you get pre-approved in the similar way here where it's
I believe so. Don't quote me on it, but
kind of a certainty?
Yeah.
Okay.
I believe so. Okay.
Yeah.
LLCs are the go-to for Americans. They are a poison for us in most cases. Okay. You're going to want to look at alternative structures depending on whether you're self-employed or whether you are not self-employed. LP is oftentimes, from a pure business perspective, it's more expensive, more complicated, but kind of gets you the best of both worlds, probably worth the investment. Okay. And understand that Florida eviction laws and tenant laws are probably much stronger on the landlord side than they are on the tenant side. But you got to be willing to be an asshole.
Yeah. Well, there's no rent cap. You can increase rent as much as the market will allow. And it's also up to you whether or not you want to renew the lease. So at the end of a year-long lease, you can say, hey, change my mind, renting out to someone else, selling the property, I'm doing whatever the hell you want with it. and they don't have a say in it. Whereas here, it obviously carries on month to month. They can stay in the property until it's sold and then have to get kicked out by the new owners if they're going to move in. Like it's
a whole process.
You have a lot more control.
Yeah. So if you're willing to be an asshole, it's better for you.
Yeah. Yeah. And raise rents and stuff more in line and stuff. It's definitely more of a free market down there.
You got it.
Okay, cool. Thanks, Fabio. This is great. Great kind of overall summary. And I don't know, just interesting to hear it from somebody else's perspective and somebody that has so much experience working with other people that are looking at this and doing it. It's just interesting.
Yeah, I mean, that's what I learned.
Yeah.
So this is the summary of what I've learned. I'm not an expert on this stuff. Probably half of what I said may be missing some information, but this is what I learned over the course of
a lot of it's in line with what I've learned as well. So I didn't hear anything that was totally, completely off or anything. The legal structure, I forget the exact setup that we've been recommending to Rockstar members, but I know an LP's involved. Don't really help with the Florida stuff right now, so probably not the best person to comment on that, but it was a similar thing where I believe it was the 1% ownership, right?
Yeah, like a minute ownership by the GP,
ownership.
By the general partner, and then the limited partners make their contribution.
Yeah, it was pretty much that. So, I mean, everything's kind of in line with what we've learned, especially with the financing as well for Canadians, 25, 30, 40% down payment options, qualify on the net worth and income. But yeah, when you sum it all up, it's like, yeah, you have to have a pretty strong incentive for going there. Like,
yeah.
If not, it can just still be easier in your own backyard. Right. I know things are always changing here and cash flow's tighter and you got to look at different strategies or maybe go out a bit further than where you live if you want to buy a property and still have a cash flow. Right.
I think the real point that I like to tell whenever my clients talk to me about it, I say, listen, you're talking to me about Florida, buying a property in Florida or buying a property in somewhere in the United States. I'm like, but you don't even have a rental property here. So you don't even know if you have what it takes to be a property investor, right? Why don't you try something out here in your own backyard first? Then when you have the experience and you feel that you're going to get more from there, okay, then we'll look elsewhere.
Yeah, fair enough. Okay, Fabio, if somebody wants to reach out, do you want to share contact info or where they can find you? I don't know if you're sharing that stuff these days.
You know what? The best is to go to my website, campanellagroup.com.
Okay.
Right now, where do I have capacity? I got my wife who's going to be giving birth anytime soon, and she's like the actual brains behind the accounting department. So where do I actually have capacity is primarily, I like to start with financial planning.
Okay.
So it's a complementary service to a lot of real estate investors hire us for, because we're neutral. We're not like pushing mutual funds or any investment products. It's like you pay me a fee and I put together a plan that incorporates real estate into your overall financial plan, retirement plan, and estate plan. So that's where I really have the capacity and, to be honest, the desire to take on clients. Like those are the clients that I'm actually enjoying the work.
Okay, because you are a CFP,
yes,
certified financial planner, as well as a certified professional accountant, CPA.
Yep. So I'm a CPA. I'm a tax specialist. Under the CPAs, I'm a certified financial planner, a chartered investment manager. I'm licensed insurance advisor for life insurance and a licensed investment advisor, so like traditional securities.
Okay, licensed investment advisor. That's another.
Yeah, so I have
acronym?
It's not an acronym. It's just like I'm licensed. Like a realtor is licensed to be a realtor. Yeah. I'm licensed to be an investment. You just have 10
more licenses.
Yeah. Like I said, the best place to start is a fee-based financial plan. So I'm a fiduciary to you. I ignore the other services that I can possibly profit off of, and what is going to work for you. And 9 times out of 10, it's just supporting people that would listen to this podcast, supporting realtors and self-employed individuals in their, the path that they need to take to really retire wealthy and to create that generational wealth. That is what I'm enjoying right now.
Cool. In
terms of work.
Okay. Awesome. Thank you, Fabio. Appreciate it. And you also teach a class here for Rockstar members.
Actually, this Thursday.
This Thursday. That's right.
Thursday.
That's right. Yeah.
I'm teaching class. It's estate planning, life insurance.
Yes. Estate planning for real estate investors. Yeah. Awesome. Fabio, thank you. Appreciate the time, man. Yeah. Thanks.